6 years into this investing thing, and I've had quite the evolution toward one simple thing: quality. It's taken some time, but I have stopped chasing yield and started chasing profits. I mean, back in the day, I was investing in things like AT&T because I loved that when I was out working and driving around, I would see the AT&T trucks everywhere. I would see their businesses in the strip malls, people going in, buying phones. But what I failed to see right away, because I didn't know any better, was that meant it was a really capital intensive business. You had to have maintenance on the trucks, you had to pay for the trucks, fuel, insurance, operators to operate the trucks, the stores, you had to pay rent and utilities and people to be in the stores. And if nobody was in there shopping, then that is a lot of overhead, making it once again a really capital intensive business and highly competitive. And I guess I had to learn the hard way that when you buy and hold a marginal business with marginal profits, you get marginal returns over many years. So I've been on a quest to find more quality investments, and it's also rare to find quality at bargain prices. So when you see those quality businesses, you better back up the truck and pick them up. I gotta shout out my guy Ryan Williams for sharing with us his idea of having two watch lists: one where it's your radar stocks, and the other one are the ones that you've looked through, you've done your due diligence, and you're ready to put them into the big portfolio, but they're just not ready quite yet. And I'd love it if you'd share with all of us in the comments what stocks are at the tippy top of your watch list that you don't own yet. Hey, by the way, you can also sign up for our free weekly newsletter with the link in the description below, or going to dapperdividends.com, where I share all the weekly portfolio activity and a few thoughts and a couple fun other things. And if you want to save a bunch of money on a Seeking Alpha annual subscription, use my affiliate link below. So before we do the top secret reveal, one of the things I want to share with you that I've used to kind of locate some of these great businesses are looking at return on capital employed, which I've been learning is one of the best ways to gauge how a management of a business is allocating capital. And it's a great starting point for some good old-fashioned stock analysis. And a cool place that you can find return on capital employed for free is a really cool website that I've been playing around with called finchat.io. Now, I own Visa, but check this out. Right here, they have the 5-year returns average, and a hallmark of a great quality business is when they have a multi-year average return on capital employed of at least 20% or greater, which when we see this return on capital employed for Visa of 27.58%, it means that when you put $1 into Visa, they'll reinvest that dollar back into the business and you'll get almost 28 cents in profits, which, by the way, is quite high. All right, so I have the quality prospect pipeline watch list with 41 holdings over here at simplysafedividends.com, but it costs a pretty penny and you're not going to be able to view my portfolio. So if you want to see it, you'll have to click the link below for the dividend tracker, because they allowed me to create one where you can view 24/7 at your leisure. And it gives you enough information if you want to poke around. Nothing groundbreaking, but hey, at least the most important thing you can see where my top secret, it's not so top secret anymore, quality watch list portfolio is at and what's going on in it. So I have two of them. I'm going to show you the prospects first and then the ones that are ready for the big league that I've already passed my screen. And the way I did this and set it up is I put 1 share of each so I can keep track of it. The cost per share is simply when I put it on the watch list so we can see what happened. And of course, the first one you can see, Apple, has already gone up almost 17% since I started watching this bad boy right here. But anyways, we all know what Apple does. We're going to move through these very quickly just to give you a flavor of the name and ticker. So Apple, AAPL, Armanino Foods, ticker AMNF. They're a very small cap, micro cap, $171 million market cap business with a current share price of $5.30. They're almost a penny stock. Remember, anything under $5 is considered a penny stock, but they have some very good metrics. My guy up in the Great White North, Mike the Dividend guy, got me onto this one for my watch list. Alimentation Couche-Tard, ticker ANCTF. Convenience stores, Circle K, around the United States. They're global though. And then we got A.O. Smith, ticker AOS, which does water heaters and boilers. Amphenol, ticker APH, does electrical connectors. If you have a kid, you're going to know Build-A-Bear Workshop. I thought they looked interesting, so I put them on the list. It's where you bring your little rugrats to make their own teddy bears, and it costs a pretty penny. And they just started paying a dividend not too long ago. Casey's General Store, ticker CASY. Fantastic business, always chronically seeming to be overvalued. They bill themselves as the pizza and beer headquarters. I think they're the 5th largest pizza chain in the United States. We got Cintas, ticker CTAS, another one that's always expensive. We'd love to see that one come down a little bit. They do uniforms and facility services. Dick's Sporting Goods, ticker DKS. I think the name is self-titled, just like Domino's Pizza, ticker DPZ. Exponent, one I'm going to have to learn about, all about engineering and scientific consulting services, so ticker EXPO. This one's in my wheelhouse, my line of work, Fastenal, ticker FAST. They distribute industrial and construction supplies. Next we got, hey, if professional fund managers, institutional investors use FactSet, ticker FDS, which is just financial data and software. Graco, ticker GGG, in the industrial space, does fluid handling equipment. Google, ticker GOOGL, we all know what Google. Alphabet does. WW Grainger, ticker GWW. They are also in my line of work. Lots of parts for construction, contractors, when you need the parts, the repair parts and all that, they have them in their warehouses. Landstar, ticker LSTR, cargo, ground shipping, logistics, transportation services. MasterCard, pretty much like Visa, but they're not named Visa. Kind of a duopoly there, the big two, MasterCard and Visa, ticker MA. Very solid, but I like Visa just a smidge better because they have a little bit lower debt. Meta Platforms, ticker META. Yeah, I've never dug deep into the business, and I know them for Facebook and the metaverse, but they do have solid numbers and margins as well. Mueller Industries, ticker MLI. They make products of plastic, copper, aluminum, brass, I think. So things like that does Mueller Industries. MPX, marine products, fiberglass boats, and we've talked about them before on the channel. They have very high insider ownership. MSCI, ticker MSCI, Investment Research and Analytics. Microsoft, ticker MSFT. You know what Microsoft does. As well as Nathan's Famous, ticker NATH. The hot dogs, they have franchisee restaurants. Who knew that they had such strong margins? Might want to look into Nathan's. That brings us to NSP. Insperity, they do human resources and business services. Another business that I would have to dig into. I don't know very much about them. This one I do. Ticker ODFL, Old Dominion Freight Line. Fantastically solid business with very nice margins. Paychecks, they do payroll, human resource, outsourcing services, and I don't know much about Paychecks either. Pulte Group, ticker PHM. Manufactured housing. Playtika, ticker PLTK. They are based in Israel and they do mobile games. Pool Corp, ticker POOL. You've guessed it, pool supplies and equipment. Papa John's been falling like a stone. I still think they are a solid business, but they're in a bit of a transitionary period right now. They got an interim CEO. We've talked about them. One that you might want to look into. I like their margins. Papa John's, ticker PZZA. And then off-price apparel store, Ross Stores, ticker ROST on here, as well as, hey, you know the S&P 500, ticker SPGI, S&P Global. So you know they do benchmarks, financial data analytics. Another one that's in my neck of the woods, Simpson Manufacturing, ticker SSD, construction products, building products. So if you know what Simpson's strong tie is, shout out, that's who makes that. Steel Dynamics, they do steel stuff. Ticker STLD. TJX Companies, ticker TJX. You know them, you love them. It's like a treasure hunt when you go into TJ Maxx and Marshalls, and that's the parent organization, TJX Companies. If you're in the Midwest, hey, maybe you've been to a Farmer's Feet. Oh, I'm sorry, I mean Blaine's. Farmer's Fleet is very similar to Tractor Supply. You can get things for your house, you can get clothes, and you can also buy things that your horses and your chickens may need at Tractor Supply. And then you got to cut your grass. Ticker TTC, Toro. They've had some issues in the past. They do turf maintenance, groundskeeping machines, and all that good stuff. Toro, ticker TTC. UFP, Haven't dug into them yet. They're on the list. Ticker UFPI for UFP Industries. They do wood and wood alternative products. Looking like a very safe business. They got a safety score of 97. Williams-Sonoma, I think most of you know, ticker WSM, higher end specialty home furnishings. They have great margins, very low debt, and they announced a 2-for-1 stock split, so right around $300 a share. In the near future, if you have one share at $300, you will end up with 2 shares at $150. Changes nothing with the size of the business or the market cap, and people get excited about it because they see a lower share price. So that's Williams-Sonoma. And then the last ticker, ZTS Zoetis. They are pharmaceuticals for your pets, for animals, and they also make vaccines too. So that was the quality prospect pipeline watch list. But here we have the big league bound watch list. These are the ones that have cleared. I would be okay adding to my portfolio. It's just not the quite right time yet, but it's getting there. But I know that these have been vetted and they're good to go. So we've got 2 of them so far, and those are Nike. You know what Nike does. 99, very safe dividend safety score. And I think under $90 is where I very well may indeed start consolidating other positions into Nike. And then we got Rollins, ticker ROL. You might not be too familiar with them. They do pest control, and they are not owned by Henry Rollins, but they do own Orkin as one of their brands. So if you know Orkin, that is Rollins. Are any of the stocks in my watch list a big percentage of your portfolio? Let us know in the comments below. And in this floating little box next to my head, I did a recent portfolio update. So if you want to see what I bought and sold and dividends I received, right over there, click on that video. And when you do that, I will tell you all about it there.